What I'd like to do right now is I want to introduce you to Rebecca Patterson. She currently serves as a grant manager team lead in the Division of Grants Administration at the Texas Education Agency. Now, Rebecca is Perkins funding. She is the authority on the funding part of it especially, and anything that has to do with the grant, the NOGAs, the reallocation, anything along those lines. If you've got a question about use of funds, she'll send you to us, but in the program area. But anything that has to do with the funding and the grants, it's Rebecca Patterson. Rebecca?
Thank you, Diane. Good morning, everyone.
Good morning.
I'm going to talk about Perkins funding. We're going to talk about understanding Perkins formula funding, and I'm going to touch a bit on the regulations, too, related to the funding. So we're going to talk about how Perkins allocations are calculated, the requirements for shared service arrangements. How many SSA fiscal agents or members do we have here? Okay, a few. All right. We're going to talk about that a bit. Then we're going to talk about the reallocation process, which is coming up next month, other important funding considerations, and some critical dates. So you're probably interested in how your allocations are calculated because everyone hopes they can increase their allocation a bit. That's very difficult, so we'll go through that. Just to give you an overview of available funds, nationwide, the legislature has allocated $1,117,598. Texas is getting $91,909,431 of that. And unfortunately, that number has dropped by a little over 200,000 since last month. We had a federal budget reduction as a result of the continuing resolution in Congress because they're having difficulty approving a budget. We're hoping we're going to get that back. Last year they did the same thing. We got the money back in March. Now, how's the funding distributed? Unfortunately, we can't give you that full 90 million. The funds are divided between the secondary and post-secondary education. So in the state plan for career and technology education that Diane has to submit to the USDE, in which the state board has to approve, the state board said that 70% of Perkins money is used at the secondary level and 30% is used at the post-secondary level. So our friends at the Higher Education Coordinating Board get 30% of this money. The Perkins statute requires states to divide the funds into 3 segments. At least 85% must flow to the local level as formula grants, so that's y'all, and also community and technical colleges. That's when the Higher Ed Board distributes their money. Up to 10% can be used for state-level leadership projects, including non-traditional programs and corrections education. So Wyndham and TYC or TJJD, that's where your money comes from. Up to 5% may be used for state-level administration of the Perkins State Plan. Basically, that's what we use within TEA to make sure the plan is carried out. And I can tell you that TEA never uses its full 5% share. Part of that reason is that at the state level, we have to match those admin dollars dollar for dollar. Generally, or under statute, any money we don't use for admin that's below the 5% automatically flows to the formula grant, and we get a little bit of that money every year. So here's a pie chart showing where all the dollars go if you break down that full dollar amount. You can see the biggest portion of the pie is for the secondary formula. That's the money that goes to y'all. A little going counterclockwise, a little sliver goes for post-secondary administration and post-secondary leadership. Then the post-secondary formula grant, which is the second largest piece of the pie. And then there are little segments for corrections education, secondary administration, and secondary leadership projects. Some of the secondary leadership funds, by the way, are paying for this conference. So just as a comparison, for the current year, the amount of Perkins funding for Texas LEAs prior to the reallocation process, which we'll talk about in a few minutes, is $55,579,000. The estimated amount of state foundation school CTE weighted funding is $1,886,000. So you can see you get far more in state weighted funding than you get in Perkins funding. So let's talk a little bit about eligibility. Funds must be awarded to CTE programs with sufficient size, scope, and quality to be effective. That's why we don't provide startup funds for career and technical programs. You have to already have an operating CTE program for us to provide funding for you. The legislation allows states to define size, scope, and quality. And Texas defines size, scope, and quality in terms of enrollment in CTE coherent sequences as reported to PEIMS. For scope and quality, we need evidence of a coherent sequence of CTE courses. And for size, which is enrollment of coherent sequences, for public school districts, we want you to have at least 10 students in a coherent sequence. And for charter schools, it's at least 5 in a coherent sequence. So it's critical that you report your PEIMS, your coherent sequence enrollment in PEIMS. And we know that you're not actually entering the PEIMS data. Someone else at your district is entering that data. And when our PEIMS folks are here, they'll tell you a little bit more about the process, and I think they'll also tell you how you can validate that data, and that's absolutely critical. Because if you get a new PEIMS coordinator who comes in, it's probably a whole lot easier for them to report all of your students as code 1. And every student who comes in is coded as a 0, 1, 2, or 3 for the Career Tech Indicator code. 0 means they're not taking any CTE courses. 1 means they're taking electives. Code 2 is enrollment in a coherent sequence. We used to have code 3, which was tech prep. Diane, have we done away with that? Last year, okay. Okay, good, thank you. So we don't expect to see many code 3s, but when we evaluate your baseline eligibility for the Perkins grant, we're looking for enrollment in code 2 or 3. If we don't see that, you won't make the initial eligibility list for Perkins. So it's absolutely critical that you're reviewing the PEIMS data before the final deadline to make sure it's submitted correctly. Let me talk a little bit more about that. If you don't we started something new this year. If you don't, somehow you don't report the PEIMS data and somebody was too busy to check it out, and you show everyone enrolled in code 1, we have had a few districts, well, every year we get a few districts who come in and say, hey, I forgot, can I still get my money? And up until this year, the answer's been a flat no, you can't, because you're not eligible because you didn't meet the criteria. We have had a few requests to review this year. There is one LEA that forgot to report it, who provided us tons of information, and we were able to give them an allocation. Now, we had the money available for that. If we didn't have the money available, we would have had to reduce everyone else's allocation to give that district an allocation. So consider that too. And we also made them jump through some really serious hoops to get it because they had to prove that they actually had kids enrolled in coherent sequences. So please, please check your data. All right, how's your allocation determined? Calculations are based on Census Bureau population and poverty counts of individuals aged 5 to 17. So once you meet that initial coherent sequence eligibility requirement, we have the list of LEAs that enrolled kids as code 2 or 3. Then we take that list and start applying the federal census population and poverty counts. Estimates for state and LE population are adjusted annually by the Census Bureau. They look at income tax statements for the area and other criteria. They start with a baseline of census counts that's done every 10 years, and then they adjust that based on the income tax returns and other factors. Now, Perkins uses the same data, the same population and poverty data for Perkins calculations that's used by NCLB. So, in other words, your allocation is not based on the number of CTE students you serve. For charters, are any charter school representatives here? A couple, okay. Your population and poverty counts are based on the information you give us on the SC's 50/50, which is a request for federal funding and indirect cost rates for charter schools. When we get those forms, we have a systems analyst who will go into the population and poverty data and adjust that for charter enrollments. Basically, we'll take one or however many students from a particular LEA move to a charter school. We'll remove that number of students from the LEA's census population poverty counts and move that to the charter school. So then once we have charter school adjusted amounts, we'll calculate allocations for everybody based on those adjusted amounts. Yes?
I'm sorry, so I was from a charter
You are not eligible if your students are coded 1 because Perkins can't be used as startup costs. We have to see evidence that you have programs that are sufficient size, scope, and quality to be effective. And the way we do that is by looking at your PEIMS data.
So is the only reason then that you code to determine eligibility for the following year? So what is the reason for coding, the fall snapshot coding each year?
You'll have to ask Bryce Templeton that when he's here because the codes are used for a variety of different things. The only thing we use them for is for Perkins eligibility. Good, okay, thank you. And a lot of districts are under the impression that if they serve more CTE students, they get more Perkins money, but that's not the case. As I said, we totally base the allocations on the federal population and poverty counts. So the number of CTE students you serve, if your population and poverty counts are the same as the district next door and you serve 500 kids and they serve 50 kids, you're going to get the same Perkins allocation. So the formula for the planning allocation, we break the formula down into 2 segments, into a 90% segment and a 10% segment. The 90% is based on the population and poverty counts. The 70% of that 90% is based on poverty counts. 30% is based on population counts. LEA allocations are based on population poverty counts relative to the statewide population poverty totals. Now I said that 90% of the grant is based on population poverty counts. 10% of the grant, what we call the reserve, can be distributed to LEAs based on criteria other than population and poverty. And let me back up. And in Texas, this is the program area made the decision several years ago to distribute that based on district performance under the state Perkins performance indicators. That was the 1S, 2S, 3S down to 6S that Diane went over earlier. There's a page in the application where we include your performance data for, I believe it's 3 years. And if you don't meet the state target on one of those measures, you have to tell us in the application how you're going to improve that. Now, if you meet at least 4 of the indicators, we give you a partial, what's called incentive allocation. If you look at your Perkins application, you'll see lines for planning or final amount and incentive amount. The incentive amount is what is based on your performance on the core indicators. And now if you achieve 5% or 5 of the measures and instead of 4, you'll get twice the incentive amount. So it's proportionally higher. So the only way you can really increase your Perkins allocation is to make sure that you meet the state performance level on at least 5 of those indicators. Okay. Okay, that's fine. Yes?
So theoretically, if every LEA scored a 6, then that 10% is divided equally between all 6?
Well,
between all campuses?
we don't, the indicators they're reported at the district level, not the campus level. So we'll go with the district level indicator. And some indicators are excluded from the calculation. I think the non-trad and one other are excluded because it's just difficult to impact. Also, technical achievement is excluded because the courses that contribute to that change from year to year. And if you have more questions about that, I think Diane can answer that because the measures aren't my expertise. All right, now I'll talk about briefly shared service arrangements. SSAs are partnerships of 2 or more LEAs that apply for funding through a fiscal agent. The congressional intent behind an SSA is that LEAs with small allocations can leverage their funding and outcomes by joining an SSA to achieve a mutually beneficial purpose. LEAs must be eligible for more than $15,000 to apply a loan unless they receive a waiver. LEAs that are eligible for $15,000 or less may apply for Perkins funding by joining an SSA. And LEAs that don't meet coherent sequence threshold may join an SSA. I want to talk a little bit more about the LEAs that don't meet coherent sequence threshold. If you have an LEA that's serving fewer than 10 students or a charter that's serving fewer than 5 students, you'll have to join an SSA to get funding. That's because in the definition of size, scope, and quality, the size definition is the number of kids you have enrolled. So if an LEA may be eligible for more than $15,000, but if they have 8 only 8 students enrolled in a coherent sequence, they can still get the money, but they have to join an SSA to receive that money. This is also a requirement from Perkins. SSAs may use Perkins funds only for purposes that are mutually beneficial to all members of the SSA. And again, that goes back to the intent for the funds to be leveraged for mutually beneficial purposes. And in the application, we'll ask SSA fiscal agents to specify what their mutually beneficial purpose is. Perkins funds may not be flowed back to individual members for purposes of programs benefiting only one member of the SSA. When the Department of Ed monitored us several years ago, this was before Diane was in the role she is in now, we had a number of fiscal agents that were basically taking the allocation and just sending the money right back out the door to the member districts. And when the Department of Ed was here, they were very critical of that because it's an indicator that the funds aren't being used for something mutually beneficial. They were just being flowed back to members of an SSA to use for whatever purpose they felt they wanted to use it for. And that's not the legislative intent for an SSA. So if we see the majority of funds going to a fiscal agent and the category where they say they're throwing it all out, we'll ask a lot of questions. Now, waiver from the SSA requirement. LEAs eligible for $15,000 or less may apply as an independent project only if they're located at least 30 highway miles from the nearest neighboring high school, or the LEA is an approved charter school and demonstrates that it is unable to join an SSA. And we will verify all waiver requests, basically a MapQuest. We'll go online and see if you really are more than 30 miles from the nearest neighboring high school. Now let's talk about reallocations, because those are coming up very quickly. Sometime next month, hopefully before Thanksgiving, we'll be giving you a little more money, so that's always a good thing. Perkins grantees receive a supplemental allocation for an unobligated Perkins funding, and those funds come from unexpended prior year funds and current year funds that were not included in the planning amount. So basically, for the past year, for prior year, that'll be all of your district's Perkins money that was not used in the prior year. And for the current year, we'll be giving you whatever admin that our TE administration said they couldn't use. It's likely to be a little lower than it was in last year. And when we distribute the reallocation funding, the law says we have to use the same formula to distribute the reallocation funding that we used to determine your original amount. So we'll apply the population poverty count information of population poverty data to the reallocation the same way we applied it to the original allocation. So the good news is you don't have to do anything to get this money. We'll do it for you. We'll amend your application for you. And we'll go into the application and we'll add your reallocation funds to the largest budgeted categories. For most districts, that's supplies and materials. If it's capital outlay or payroll, our negotiators will get in touch with you and ask you what you want to do with that money. The e-grants application will close temporarily for amendments before reallocations are loaded, and we're not going to give you any warning on that. We'll just do it because we don't want you to jump in and start working on the application, because if you do that, it slows down the process. It takes a lot longer to award for our negotiators to award the reallocations if we have a lot of applications that are already in process. And you won't be able to amend the application until TE adjusts the budget schedules to add reallocations. But once you receive that final NOGA with the additional money in it, if you don't like where we put it and you think you need to do an amendment, then you can go in at that point and do the amendment. And I don't think I have a slide here at this point, but you have flexibility to move up to 25% of your total budgeted amount between previously approved categories on the application without doing an amendment. There's some exceptions to that, for example, in payroll and capital outlay, but for the most part, you have a great deal of flexibility with your budget. You would have to do an amendment, for example, if you want to purchase a new piece of capital outlay that wasn't included in your application, or if you want to add a new position to payroll and some other categories. We have a table on the grants administration, administering a grant page that has, it's a great chart that tells you when to amend the application. So you can look at that element by element and determine if you actually need to do an amendment. And if you think you need to do an amendment because your business office wants you to, and our negotiators get it and they say you don't need to do an amendment, they'll void it. So it's best to save yourself trouble and look at that table before you submit one. So let's talk a bit about some important funding considerations. This is where we're going into the regs. Yes? It's on the TEA website. If you look on the home page, there's a little calculator at the top, and that goes to the fiscal areas. And go to Grants Administration on the Administering a Grant page. And there's a number of links on that page that has a ton of useful information for you. So other important considerations. If some of you may have come from NCOB programs. NCOB has something called carryover or roll forward. That means that any funds they didn't use in the first year of the grant, they can continue to use. So they have 27 months to use that money. The Perkins law does not allow that. Talk a little bit more about that later. We're also going to talk about obligation of funds, receipt of goods and services, reasonable and necessary costs, supplement, not supplant. So then some of this may get a little boring for some of y'all, but we're going to go ahead and do it. So as I said, some federal grants allow LEAs to carry over or roll on expended balances to the next funding year. Perkins statute requires states to redistribute unexpended funds. So whatever funds LEAs don't spend late in the fiscal year comes back to us, or in this case, it means it's sitting there already in our accounts. Whatever funds are sitting there at the end of the fiscal year, we're going to lump together and use for reallocation during the next grant year. This year, there's about $2.3 million there. And that'll be divided between all of the LEAs that currently have an allocation. This relates to the period that you can actually use the funds. Funds shall not be obligated before the beginning date of the grant or after the ending date of the grant unless pre-award costs are expressly allowed. So if your grant starts July 1, you can't purchase something in June and say, oh, I'll charge it to the grant, because that happens in July. And the same thing, you can't buy something after the ending date of your grant and charge it to the grant that just ended. You have to charge it to the grant that you have approved for that current budget period. And funds may only be requested for items that are reasonable and necessary to accomplish the goals of the grant program. That means you can't use Perkins funds to buy something for a non-Perkins classroom, for example. Or you can't use Perkins funds to buy a computer lab that won't be used for CTE students. It has to be used for the CTE program. More about obligation of funds. Your LEA must receive the benefit and liquidate, which means record as an expenditure, all obligations no later than the revised final expenditure report due date. And an encumbrance cannot be considered an expenditure account payable until goods have been received and the service is rendered. Basically, that means that you have to spend your money between the beginning and ending dates of the grant period. And the term obligation is key here because it governs when something can be charged to your funds. But instead of including a table of that, I'm going to encourage you to look at the general and fiscal guidelines for your grant. And there's a table is on page 25 in those general and fiscal guidelines. There's a lot of information there that you need to know that talks about applying for the grant and managing the grant and then closing out the grant. And whoever certifies and submits your application has to certify that they've read and agree to all those provisions. So we don't know how many people actually do that before they submit the application to us, but it's very valuable information. And the general and fiscal guidelines you can access through your Perkins homepage on eGrants. There's a link to them there, and there's also a link on the TEA grant opportunities page to the general and fiscal guidelines. So receipt of goods and services. Okay, this is where we're giving you a little more flexibility. We're trying to be kinder or gentler when it comes to federal regs and TEA regs. In the past, when you received a NOGA award letter, it said that all goods must be received and services rendered between the beginning and ending date of the grant. Under the new flexibility, goods and services delivered near the end of the grant period may be viewed by TEA as not necessary to accomplish the objectives of the grant. In the past, if we saw that you made a major purchase, say within the last 30 days of the grant, and if our monitors or auditors picked up on that, they would assume that you were probably just spending the money to utilize all your funds, that you really didn't need that purchase. Now we're going to look at those on a case-by-case basis. Our TEA monitor or auditor may disallow expenditures if the subgrantee is unable to document the need for the expenditures, demonstrate that program beneficiaries receive benefit from the late expenditures, or negate the appearance of stockpiling of supplies. That means if you spend $35,000 toward the end of during the last 2 weeks of the grant on supplies and materials, then it may be an indication that you're just trying to use your money by buying up a bunch of supplies and materials that you intend to use for the next grant period. So all costs must also be reasonable and necessary. Anything you spend funds on has to be budgeted in the application. And the expenditures must be reasonable and necessary for the objectives of the grant. So what does reasonable mean? That means a cost generally recognized as ordinary and necessary for the operation of the organization or grant performance. We'll look for evidence that the grantee is acting with prudence and responsibility to the organization, its members, employees, clients, the public, and federal or state government, and that there are no significant deviations from established practices of the organization that may unjustifiably increase cost. Basically what this means is you can't be extravagant. If you need a monitor in your classroom, don't get the 52-inch monitor. Get something smaller, get something that's adequate, but don't spend the money just for the luxury of having something that you really don't need. It needs to be reasonable. It's something that the normal person or would consider reasonable, or the normal educator would consider reasonable. Maybe not a normal person. Educator. A lot of us think a 52-inch TV is pretty reasonable and necessary. I don't have one. And what is a necessary cost? Necessary costs are those that are essential to accomplish the objectives of the grant program. That means, do you need it to fulfill the requirements or the needs of your Perkins grant program? Now, supplement, not supplant. This is really critical. This is one of our biggest principles that we look at in the world of grants. Perkins funds must be used to supplement, which means increase the level of services, and not supplant, which means to replace funds from non-federal sources. And there are several examples of this. Any program activity required by state law, state board of education rules, or local board policy may not be paid with Perkins funds. That means because it's required by the state or your district, so they expect you to use your state or local funds to meet that purpose and not the federal purpose. You can use the Perkins funds for purposes that exceed or supplement those the activities that are required by state or local policy or ordinance, but you can't use it to implement those policies. If you have a question about supplement, supplant that you think is borderline, it's a good idea to check with us, and then I can check with our auditors if I don't know the answer and find out what their impression is. State or local funds may not be decreased or diverted for other uses simply because these Perkins funds are available. That means that maybe you think you have excess Perkins funds, so you can free up state or local funds by using them for something else and use your Perkins funds for that purpose. You must also maintain documentation that clearly demonstrates the supplementary nature of your Perkins funds, because the auditors are going to ask for that if they come in to check on things. There are several assumptions that the monitors or auditors will make about a supplanting if they see this situation, or if they see the situation, they assume that supplanting has occurred. Federal funds were used to provide services that the LEA is required to provide under state or local law, rule, policy, or a court order. Federal funds were used for any service that was previously funded with state or local funds, because then they assume you had the money to provide that service with state or local. Why are you suddenly decide to use your Perkins funds for that? And then assumption 3, federal funds were used to provide the same service for eligible children, such as CTE students, as the LEA provided with state or local funds to children not eligible for services, that is, students who weren't enrolled in CTE education. So this is probably a very old example, because I think most districts are fully networked now. But if your district decides it wants to install wireless networking across all classrooms in the district, And they think they're a little short on state and local money to do that, and they think that they have enough money in the Perkins budget to wire the CTE classrooms. They can't do that because it's local policy to wire all those districts or all the schools in your district. They can't decide to use Perkins money for that because they've already made the decision of policy to install the wireless networking for all the other schools. Yes?
So, 3 middle schools. One middle school decides that for their career explorations, they want to use a certain type of curriculum, and they do that, and they buy it with their local money.
Mm-hmm.
And then the district looks at it and go, hey, that's really good curriculum. We'd like to implement that district-wide with our other 2 middle schools. Could we then use Perkins funds for the other 2, or would that be supplanting because we're already using it in a middle school? We wouldn't be able to use it in B and C.
Was the first purchase made with Perkins, or was it was made with local? That's something I'd have to check with our auditors, but I think that probably is a supplant. If district policy is going to be to use this district-wide, then I think they would have to use their state and local for that. But there are a lot of gray areas in supplement, not supplant. That's why I check with our auditors frequently on these questions. Now, one major test for supplanting is one major test to determine whether supplanting has occurred is whether the program supported with federal funds would, in the absence of those funds, have been supported with state or local funds. So ask yourself, if I didn't have these federal funds, would I conduct this program, activity, or service with other funds anyway? And if the answer is yes, you're supplanting because it's no longer a supplemental activity. The LEA must be able to demonstrate that it could not conduct the activity if it didn't have the federal funds. So that's the baseline test for whether it's supplemental. Now, the TEA website on the Administering a Grant page, which I talked about before, has a supplement not supplant handbook that gives you a lot of information, and it's under the guidance and counseling heading. I have 5 minutes, so let me see where I am in here. Okay, we're toward the end. We always get the question, generally it's earlier in the grant year, but since we have reallocations coming up, we're going to get this question again, where's your NOGA? When application is approved, we send out an email, generally to your grantee official, with an email saying that the NOGA's been awarded and a link to the NOGA. The folks who actually worked on the application don't always get that. So you may not know, you may not see the email, but you can always find your NOGA and the NOGA award letter on eGrants through the Perkins website. So this is a screenshot of a district's Perkins homepage, and if you'll notice, I've circled some unreadable text there at the bottom. That actually says Document Library. When you open the Document Library, click on the link. You have to make sure your pop-up blockers are turned off, because when you click on the link, a little box will pop up, and that box contains all versions of your application and your various NOGAs and NOGA award letter. Anytime you submit an application to us, whether it's an original, if our negotiators ask you to make some revisions and you send it back to us, every version of that application appears in this pop-up box. So when you see this, if you're looking for your NOGA, just click on the link in that pop-up box and you can pull up your latest NOGA. Contacts, all right. We're trying to send folks to the TEA help desk, but if you want to call me, I'll give you my phone number. It's 512-463-5085. 512-463-5085. And my email is rebecca.patterson@tea.texas.gov. And then I've given you the program and the contact for the Division of Curriculum to Diane and her staff. And I think that's it. Any questions? Yes?
If you spend too much of your, too many of your funds up front and you cross the threshold and you have to fill out that letter or something like that, is that causing any ripple effect for us?
Not at all. Not at all. No. It's really a technicality. That's all. Just a little, I know it can be kind of annoying, but they're just looking for basic information. That's mainly because, especially before October 1, We get the federal money in 2 installments. We get a July NOGA, which gives us about 1/3 of the money, and then we get a October NOGA, which gives us the remainder of the money. So when we start the grant period from July through September, we have to make sure that districts aren't drawing down more than 30% of the money because we won't have enough to cover it. After October, then we have the full amount. There's also, they set the thresholds just to keep track of districts that might decide they want to draw down all their money at once instead of on a reimbursement basis, which is the way most districts do it. So we get the ER system generates those notices pretty regularly, but it's no reflection on you. It won't come back to haunt you at any point. Anybody else? Any more questions? Okay, well, you've got my phone number and my email, so thank you. Got through a little sooner.